All right, what's up, guys? This is Mike here with Ninja Trading, and we actually have a very exciting episode today. So, this episode is going to be talking about range trading. This is going to be one of the easiest techniques you'll ever learn, but it's probably going to be one of the most effective. So, we're going to be talking about this for Bitcoin and a little bit of gold, but in Bitcoin, this is like the easiest strategy ever. A couple of other videos you want to watch that will give you some good background knowledge to play into this. Support and resistance, part one and part two. Uh, Volume profiles, not as important, but it's pretty important. Pivots are a good one. And the Fib strategy and Fibonacci levels. Those will really help you for take profit targets and whatnot. So, you guys ready? All right, so this, I promise you, go through and chart this out yourselves and you're going to see astronomical results. Like Bitcoin hasn't really been moving, but I've been kind of making up for the lack of moves with just some scalps. Like if you guys remember yesterday, I called out this scalp, but it's sometimes it's a little bit hard to call out all these scalps for you because as I go through this, you'll see like if these patterns happen and move very quickly. So, okay, so Bitcoin, right? The first criteria for range trading is you can do this on a lower time frame or a higher time frame, right? So what do I mean by this? The higher term time frame is like this has been a range. So this has been a range, but your higher term time frame ranges will probably be swing trades, right? Because they take longer to develop. Now you can also go down and zoom in and go on the lower term time frame, like the 50-minute or the 5-minute. A lot of these will be scalps. So I'll talk about entries, and then I'll talk about different take profit points, right? So first things first, entries. So the easiest thing to look for on Bitcoin, especially when we're in a constricted range, and you'll find a lot more of these trades, because if you trade Bitcoin, you know that Bitcoin's volatility has been absolutely garbage lately. It's been trading very technical, but we're not getting like 2 to 3,000 pip moves in like 2 days, right? So with that being said, local range, right? So let's say we're here and all we see is this, okay? So all we see is this. After this move, after this happens right here, you can safely say that we do have a swing high right here. And that's how zoomed in I am. These arrows are absolutely huge. Okay, swing high and swing low. Okay, so we have a range. Now, one important thing that you do have to have a little bit of experience on is you have to know what's a range and what's trending, right? So, for example, this right here, like we're still trending. We haven't really, we spent a little bit of time right here, but that hasn't really been a range formed, right? This you can classify as a range. This you can classify as a range. Like this one it's doing right here, this is still trending. So you have to know when we form a range, so we have a swing high and a swing low. So a swing failure pattern, the best swing failure patterns that I look for is you break the high or you break the low and you immediately come back in. So what does that look like? So we have our low right here, right? And then we have our high. So a swing failure is when we're doing all this and we come down, break it, and we come back in. So that's a swing failure. What's not a swing failure? So if you're looking at this as a potential swing failure, okay, you broke it and then you just started spending time below it, right? So that's not a swing failure. This one's very easy. It wicks. You can even see this on the 1 minute too. Did not even spend seconds down here. So on a swing failure, this is very easy. it breaks the low. So let me go over the psychology of why this works, right? This works because when you have a swing low and you have all the liquidity below, this starts grabbing some stops and it goes to generates liquidity to go the other way. That's why swing failures are so powerful. Because if you have market makers that want longs, then these longs or all these longs probably have stops right here, trigger the stops, they market short into the market makers longs, come right back up. So that's the psychology and why it's so powerful, right? Grabs the stops, generates liquidity. So think about it, if you're trying to fill millions of orders, you need a lot of smaller orders selling into your buy orders right here, right? And how do you provide it? You trigger stops, make people think we're going lower, grab their stops, right back up, generate the liquidity. You do the same thing on the other end, okay? So the best thing to do is on TradingView, you set an alert. So add alert. By the way, why do you guys think I have an alert right here? And I have an alert right here. So looking for these swing failures, right? Set the alert. Where'd it go? Okay, alert right there. So crosses it. Okay, comes right back in. This is a swing failure. So you set these alerts when you see this. Let me stop this right here. Okay. When you see this right here, you grab along and you immediately go the other way. Okay. So that's one example. Same thing right here. Oh, and when you do this, this is why it's so powerful, right? So when you grab a long, let's say you caught the long right here, you just go stops below the last low, okay? You aim towards range high, which was right there, okay? So this one, you have a 8.57 to 1 risk reward ratio. Even if you caught it later and it's like all the way up here, you still have at least a 2 to 1 risk to reward ratio. But if you're able to catch it somewhere down here, so look at this, the stop loss is absolutely minuscule. You have a less than $100 stop loss, which in Bitcoin is absolutely nothing, right? So it's one example just of today. Example 2, when this comes back in, oops. Oh, let me go over this, okay? So you have your swing high, this pumps, looks like it's gonna break, go a lot higher, people are buying, generating liquidity for short orders, comes right back in, right? So after it, so same thing, you set alert right here, after it breaks back in, go short position, stop loss above the highs. This actually gives you 2 entries, right? If you miss the first one and you see this come back up, that's an entry. There's another entry as well. We'll talk about, so as a side note, you don't necessarily always need a swing failure. You could have a pump up to close to, where the last top is, and then dump, right? This would always also work as well with stop above the last high, because look how low your stop loss is, right? So your risk to reward, even if this gets stopped out, your risk to reward is absolutely incredible, right? But I wouldn't necessarily do it on the first attempt up. Like you have your first attempt up, failed. Okay, second attempt up, this is where you look to grab it. The fail right here. So you can probably go like when it comes back in a little bit. Still phenomenal risk to reward ratio. You would have hit at least one take profit, right? So I'll talk about entries first, and then I'll talk about take profit targets, right? The one that I announced last night was this swing failure. So you had a range high and a range low. This was like easiest trade ever, right? Okay. You came up, rejected off the high. I actually did not take that. Okay. Because I had a feeling this was, so this one was right at market open. So another pro tip, market open at 5 p.m. Pacific Standard Time. A lot of times you get a pump into this, a swing failure, and that's the perfect short. This is way too easy. So we took a short right here. We're still in that short. Okay, 1,000 pips later, or 1,600 pips. We the last official take profit was about 1,100 pips, right? So 1,600 pips later, not bad. So again, you had your swing high, okay, right here. You set an alert, it breaks, comes back in. Okay, so even if you took a position right here, right, like after it's come back in, stop loss above the high, that's a very reasonable risk to reward ratio. It never takes it, and boom, right back down. Why was this not a swing failure? Because look, this back tested the SR. You had a perfect, this was actually a perfect SR flip. You back tested the breakdown point, so it never came back in, right? So that's an easy sign for no trade, because a swing failure would have done one of these, right? And you take it on the way back. So that was an easy no long. So the nicest thing about these swing failures is you have the easiest stop loss in the world, and most of the time it's a very tight stop loss. So it makes these for very good risk to reward ratios. Okay. We go on the 15-minute here. So this range, okay. This was actually, where was it? Look at this. So this is where the day started. Remember I was talking about the initial pump? This pumped right here for the first about an hour and a half, a little less, and swing failure. So you have this range right here, right? Comes back down. Oh, let me go over this one first. This one was the easiest, obvious one that I took. So you drop, okay? Swing high, swing low, okay? Swing failure, right back up. Easy. You would have hit some take profit targets right along there. Eventually got stopped out, but hit a lot of take profit, especially if it was a scalp, right? Okay. Right here too. Okay. You have a range. Okay. So back here, start to form a range. You have a breakout swing failure. Could have taken the short. I mean, this is very small moves, but sometimes they're just very small scalps, right? Would have taken profit at the bottom of the range, which I'll go over. Had another swing failure, right back up. Had another swing failure, right back down. Had another swing failure, right back up. This was the big swing failure. So now the range kind of looks like this. Okay. Big swing failure. I mean, even if you took this big swing failure, that's for what was happening that day, 600 pip scalp, not bad. This swing failure broke the high, came right back down, never looked back. Super easy trade. Okay. This was a bit of a harder range. So I would, okay, where's my range tool? Okay, so after this, I would classify this as the swing high. You can use this, but you know, it dropped further, and I would classify this as the swing high. Okay, swing low. So on this swing failure, okay, this you technically would have got stopped out on, but you could have entered it again right after you swing failure this high. So this is one of those trades to where you might have got stopped out, but would have been for a small stop loss. Okay, and then came right back down. So these are the ones you got to be careful for. Or if you just put your stops a little bit above. Okay, let's say if you entered in right here, let's put a little bit above. Or you can put it above that high, right here. Okay, would have worked. Or you know, if you got stopped out, do it again, and you would have got a nice trade all the way down here. Okay, so on lower time frame, especially when Bitcoin is in a slow moving phase, this is really nice for scalps when this is all you're given, right? Doesn't necessarily have to form a range. So You can form a swing high, swing failure, come right back in, right? So if this was one of these that did like one of these, okay, this is not a swing failure. But see how quick it came back in? Easiest pattern to trade. Bitcoin does this all the time. This one, you didn't quite swing failure, but you know you start getting a rejection. So I mean, I probably wouldn't have taken that. Probably wouldn't have taken that one. Can't catch them all. This one, you technically had this swing failure, which would have been nice. Would have been nice. It's a little bit harder. You could have taken this swing failure, would have got stopped out, but at least hit take profit one. Okay. This one, I remember. Oh, this one right here. So down, swing failure, right back up. Okay. You have this swing failure. The nice thing about this is you're going. This one is a 50-50. It would have worked out, but you know, you get a big. You look for these long wicks, right? I mean, if you see this long wick at an attempt and it's coming back down, like even if you took it right here, okay, above that high as it's coming down, still a pretty good risk reward ratio, especially because these were bigger ranges than what we have now, right? So you're getting like 1600 pip ranges. Now we're getting like 3 to 600 pip ranges. So there's that one. This is a nice little swing failure. Okay. Pretty simple. This first one could have been a scalp on the way back. Second one all the way back down. Would have been a nice short right there. Same with this one. This was the big short that we took, right? So you have this range, you have the last high, you come back. Okay, so you have this high, it's attempting. Okay, it's attempting, and then this. So we actually took a short off of this and this, and then never look back. Same right here. You have the low, take the low. You have the low, you take the low. Okay, so there's same thing right here. You have a high, swing failure that high, come back down. So this is on the lower time frame. You have a high, swing failure, all the way back down, right? This one would have been a lot harder to catch. But I'll show you why this was actually an easy trade to catch. So same thing right here, right? You have a high, swing failure, back down. So this is literally everywhere on the lower term time frame. Let me show you on a higher term time frame how powerful this is. This will blow your mind. Okay. So remember, these are like 30%, 10,000 pip moves, right? So check this out. So remember I said you can use this on a lower term time frame and a higher term time frame. So have this low created. Okay. So we had all this. I personally did not long this. This was in church. But well, look at this. That's a swing failure right there. Easy. This one a little bit harder to catch. But there was a separate reason for this. Oh, and another thing I want to say is if there's confluence at these levels, like when you swing failure these, like if this hits like a daily level, which this actually did, this was a big daily level. This was a big daily level as well. If this is, this one was a swing failure onto a daily level. If you have levels of confluence like point of controls, negative point of controls, daily, weekly, monthly closes, other SR levels, very good confluence. If you have two things and a swing failure, perfect, right? Let me show you this right here. Look at this. So after this drop, we've been forming a range. We have the range low. You set an alert. Look at this swing failure. You come back in. You could have longed anywhere here on the way back in. Look at this. And this is why when I give a trade, I'm like, you take the swing failure. This is what I mean. Okay. Could have done anywhere back in here. Okay. and this went for 10,000 pips on a swing failure, by the way. And this only took a week, right? 10,000 pips, 1 week trade. Not bad. You guys want to know something else mind blowing? This is how we caught this low, or this low right here. About to blow your mind right now. Okay, you have this low. This is how I got this exact low within $100. You had this swing failure. This has been the absolute low so far. Caught it. 8,000 pips. It's coming back down, but you know, we're looking for swing failures, maybe of this point even, or of this point back down. So if we swing failure this again, easy trade. So even on a higher term time frame, I mean, look at the precision on these trades. So not as much going on. So when Bitcoin is trending and you have big moves, it tends to be a lot less prevalent, but like within the local ranges, where do we go? There's a couple of nice ones that I remember. Okay, this right here, the 47K drop, you had this range, swing failure, from 47 all the way to 59K, 12,000 pips. Okay, this was a slower developing one, but look at this swing failure from essentially 60K down to 28.8K and counting, right? What else? Even on, they're everywhere in high turn time frames. Look at this. You have this low, swing failure, right back up. Doesn't always happen on the highs, but it happens on the lows. Oh, I remember this one right here. This is the one I was talking about. Okay. Even on this move right here, swing failure, back up. So swing failure, a higher low, so would have never triggered your stops, right back up. So same thing right here, you have a range forming, boom, double swing failure, down. This one right here, swing failure, these lows, right back up. I mean, guys, it's just literally everywhere. This one actually double bottom, pretty rare. So Bitcoin doesn't like to double bottom. It likes to either form a higher low or swing failure, like this right here, swing failure. So the swing failure, so why is this so effective, right? Even if you only hit like 50% on these swing failures, your stop loss is so close that even if you have 50%, your risk to reward ratio is absolutely astronomical. So for Bitcoin, what are my take profit targets, right? So, one thing that I would like to note is this works a lot better on bybit than it does on like Hugo's Way or KOT4X, because bybit has zero spread. So if you have a spread and you enter in like a position right here on the swing failure, which would have been great, but your spread is so large that takes away your small stop loss. So I would definitely get on Bybit and do this. I mean, this is like the easiest money. So a lot of these times you just go for scalps and you go for small money, but you can get like 2% on all these scalps, and you can do this like twice a day. So I mean, you can just get 4% a day on doing this. You still have all your other main trades running. So these are just quick scalps, right? So write this down. Your take profit 1 is point. So your entry is when it comes back in below that higher low. Your stop loss is above that last higher low. Your take profit 1 is the local range point of control. Your take profit 2 is the 618. Your take profit 3 is either the 886 or the range low. And then if you don't have more than 3 take profit pieces, well, on Bybit you can indefinitely take profits. But if you don't have more than that, you can not do the 886, and you can just go for just hold pieces, right? So I'll go over this one right here. So this was the trade that I was able to call. I think by the time everybody got it, we were like probably right around here, which is not bad, right? So the take profit one okay, so let me rephrase that. If the range is bigger, your take profit one is the 382. Or you always want to front run. Anytime I give you a level, you always want to front run it by like $10 to $20. It's just, I like to at least secure the profit instead of get greedy, right? So your take profit one could be the 382 or the range point of control, depending on where it is. So sometimes if you're scalping small ranges, the 382 is going to be way too close and you're like making no profit, which is not necessarily worth it. So you could have done take profit 1, 2, 3. What I did is, what I gave out is take profit 1, take profit 2, and then I saw this was going to run, so we had to take profit 3 down here. But if it was just purely range trading, your take profit 1 is either the 382 or point of control. So since this 382 was a decent ways, about 200 pips, we took profit 1 here and we took profit 2 here, right? So if take profit 1 was like 50 pips, depending on where you got in, like if you got in right here, this is probably not a take profit, right? It's way too close. You want to take profit 1 here. So sorry about that, need a little bathroom break. But so, and then once you hold pieces, this is where you can always ask what other take profits are, but there's other levels of confluence. So we had a 30K psychological, and then we had a high volume node and the end of a single point, which is why we took profit again down here. But we're just waiting. We're holding a piece to see if we get a big range break, right? So the nice thing about this is, let me just go over this mini range that we have right here. So you have this swing failure. Okay. So at the time you go high to low, take profit 1, take profit 2, range high, take profit 3. And then you hold a piece. And when you have the swing high, okay, you can take profit 1, now you can take profit 2. Or if you're here, if you don't want to take profit 1 because it's too close, you go fixed range, point of control, so it would have been down here. Literally hit it to a T, by the way. And then back up, did not trigger your stop, take profit 2. So the nice thing about this range trading is this gave you a very nice long. This gave you a very nice short, potential for a second short, right? So you've taken profits on a long, stop loss at entry. Take profits on a short, stop loss at entry. Okay, you can do this repeatedly. So both of your trades, so let's say, for example, you have one long and you have one short, right? Here's the magic in this. People are like, oh my God, I gotta catch the breakout. We don't try to, if you try to catch this breakout, wrecked, right? So we don't try to long the breakup or short the breakdown. So if you have a long from here with the piece running, so if you've taken profits 1 and 2 or 1, 2, and 3, if your trade gets stopped out, you've still won the trade. Like, you don't care if it gets stopped out from this point, right? So you have a long from the bottom of the range, then you have a short from the top of the range. Are you worried about trying to catch the breakout and getting wrecked? Do you care which direction it breaks out, right? So now you have a piece. If it breaks up, your short gets stopped out, but that's already a winning trade. The last piece of this, or the last 2 or 3 pieces of this, run. If it breaks down, vice versa, you're golden, you know? Like, that's why I'm like, I don't care which way Bitcoin breaks, as long as it moves, we're good. because we're probably in a long from the bottom of the range and short from the top of the range. Not bad, right? Same thing with same thing with this range, right? So this swing failure, okay, you're in a short. You're in a long from right here. You're in a short. This would have got stopped out, but you're like, hey, swing failure, another short. Take all the profits. Okay, so you would have hit. Now you take profits on the way up, all your profits on the way down. Do you care if the range breaks up or down? No. This is why range trading is so awesome. You make your scalp profits, and whichever way it breaks, the longer that you're in a range, the better, because then you have positions. One way, whichever way breaks out, right? So this broke down, so your shorts are in profit. If it broke up, your longs are in profit. Now let's go to a higher term time frame range, right? So up here we were showing the top of the range and long the bottom of the range, right? That's why when this happened, like a lot of people got wrecked, but we had like 6 shorts accumulated up here, so we're good. This range, we still have this short, like last piece of it, right? We have a short from right here. 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 We have a long from right here. And we have a tiny piece of a long from down here. So if this range breaks down, great, our shorts get paid. If this range starts reversing and goes to the top of the range, great, more take profits on these, and then we'll compound our longs on dips or take more longs, and if it breaks up, great. So do you see how with this range trading strategy on a lower time frame or a higher time frame, whichever way Bitcoin breaks, like you're winning, right? Like if Bitcoin breaks up or down, like there's never a bad day. The only day there's a bad day if Bitcoin doesn't move and you get like 200 pips, right? So this is actually it's a whatever day we accumulated some positions. But if it just if Bitcoin does this, okay, it just flatlines, it's a bad day, which rarely ever happens, right? But if it does any of this, it's a good day. So the power of this is you identify a swing failure on Bitcoin, and this works on different time frames, and you just mark them out, set your alerts. And notice how I didn't even use any Confluence with anything else, right? Confluence really gives you better, great entries too, but also gives you great take profit targets. So on gold is a little bit different. Okay. Gold, you go off the 786 a lot. So gold doesn't necessarily like to do the same swing failure patterns as Bitcoin does. It likes to make higher lows or lower highs before taking off. And this is what I mean, right? So this is a higher low and then it takes off. Okay, it doesn't do this. So what that means on gold is strategy is still the same, but this is where the fib strategy comes into place, right? You have a swing low, you have a swing high. Okay, so when it comes up here, okay, so gold, you implement the fib strategy, targeting the 786. Okay, 786 down. Okay, you're within the range. And what you do is you put your stop loss literally right above the high, which the fib strat does for you. Okay, you can actually even put it tighter too. 786. Okay, your take profit point, the fib strat gives you a great take profit point, but if your range is higher, you can go 382. So this is the 786. Sorry, the 618. Okay, so if this was Bitcoin, you would expect Bitcoin to do this before continuing up. Because it's not Bitcoin, you go range low, range high. Oh my God, is that the 786? Okay, last night too, I said I was looking for this juicy 786. Okay. Did it hit the major take profit to the dollar? Say it ain't so. Say it ain't so. Another thing that you can do with this is, so this is where confluence comes into play, right? So another reason why I gave this trade yesterday for the 786, I was prove it to you guys. Okay. GB produced 40 pip reaction. That 786 looking nice though. Would fill in inefficiencies from drop. That was before. Okay. Oh, now we have another pivot. Probably gonna go up. The other reason why is we were up here. We tagged this pivot. We continued up. There was a lot of inefficiencies right here from the drop. Single prints. You want to fill those. Happens to be where the 786 is. Literally fills all the single prints. And then at the time, if you're looking here, we had this naked pivot, so I knew it was going to come down. So, okay, right here, we form a swing low, a swing high. 786 caught it, boom, on the way down. Sometimes the 886 catches it, but for gold, 786 all day. Okay. Actually, I wonder if this one worked. This is not a trade that I took. But, hey, look at that. We're in a range. Swing low, swing high, 786. Take profit 1. Take the reverse 786, back down. This one's a little bit harder because this was a more of a this behaved like Bitcoin right here. This was a swing failure. But I mean, when you see this on gold, when it breaks the bottom of the range, it comes back up. It works too. Swing failures work. So this is probably not 786, but missed it. But if you use 1.1, hit the 618. Okay. So those are just some simple examples. I would expect a reaction right now. By the way, for those of you that haven't watched the Ninja Flip strategy, there's a reason why the take profit lines up with the golden pocket. I would expect a reaction here at the 786. Range high, range low. This hit the 786, give a reaction, hit the 886, and then all the way down. Ooh, that was the golden pocket. But you can see, so gold is, I would say, a little bit easier because you can just set your stop loss above the last swing high or the swing low, and you know, it doesn't like to go stop hunting like Bitcoin does. Probably because there's a lot more liquidity on gold. But yeah, it doesn't necessarily work on trending moves. That's where you use the 382 whole of the video. This was just some crazy action, but in ranges like this, super easy. From here to here, 786. Huge take profit. Would have hit your stop loss, but this was swing failure. I mean, even this. Ooh, the golden pocket caught that one. And then we already did this example. So this was just all recently. But look, it is just super easy and super effective. So remember, Bitcoin, swing failure after the range is formed. And this is, so you gotta identify when a range is forming, right? Not like this, where it just like trending up. This is a range, right? Range sideways, trending, sideways, trending. This could be classified as sideways, right? So sideways, trending. So that's about it. One other thing I just want to add as a bonus to this video. Let's see. So this was the heads up on the trade I was giving. One trade can make your whole month. So I started, I'll show the results, but I started a challenge account from 10K to 100K. And this one trade has already put me at like 60K, so I might have to redo it. Let me see if I can show this on my phone. I don't know if you can see that. Yeah, but super blurry, but it's, yeah. See that? Anyways, that says 65. So from like 9.6K to 65, it's been like 2.5 weeks. So hey, one trade could make your whole week. I might have to redo the challenge. Oops. Um, yeah, I might have to redo the challenge because that's been so quick. But yeah, but look, if there's any questions, let me know. Hit me up in the group. Hit me up on Instagram. Trading. Oh, this is the video that I did right after the swing failure. I mean, it's just easy money on Bitcoin, man. So take this into practice. Go back and mark it out. Mark out your swing failure levels when ranges form, and man, it's so easy. But it's gonna be the day close soon, so might be looking to trade this. Hey, have a great one, guys, and keep crushing it.